Assalamualaikum, I'm Hafizah, your investment advisor. Welcome back to the Profit Virtual Forum. So today, we have an extraordinary topic for our audience. The topic today is REITs, which are Real Estate Investment Trusts. So, what is REITs actually? REITs is a stock that is traded openly on the Malaysia Stock Exchange, and it allows normal people with not a lot of money to easily invest in real estate. Let's watch this video first.
Amanah Pelaburan Hartanah KIP REIT membuat kemunculan sulung di papan utama Bursa Malaysia hari ini dengan mencatat premium 4 sen berbanding harga tawaran awam permulaan IPO RM1. Syarikat ini merupakan REIT sulung yang disenaraikan di Bursa Malaysia bagi 2017 dengan menyaksikan 1.78 juta saham bertukar tangan pada pembukaan. Ketua Pegawai Eksekutif KIP REIT Lim Han Gai yakin penyenaraian ini berpotensi meraih hasil sekurang-kurangnya RM234 juta. KIP REIT merancang untuk menggunakan sebahagian daripada hasil penyenaraian itu untuk membangunkan 5 buah pasaraya KIP Mart di Johor, Negeri Sembilan, Melaka dan sebuah pusat runcit kejiranan KIP Mall di Bangi.
KIP REIT at this moment, I think we spread from Johor to Selangor. And in this KIP REIT, we actually secure 5 roofers, right of first refusal from the promoter. It actually tallied with our intention to move northward and eastwards. So the roofers itself, there are 2 in Selangor, 1 in Negeri Sembilan, 1 in Kuantan, and 1 in Kedah, Sungai Petani.
Setakat ini, KIP REIT mempunyai 6 aset termasuk 5 KIP Marts dan 1 KIP Mall di Johor, Melaka, Negeri Sembilan dan Selangor.
REITs pool money from investors to purchase and rent out properties. These properties are managed by REITs managers who can acquire, grow and diverse assets within the REIT. These managers may outsource the daily operations to property managers who attract and retains tenants and maintains these properties. These properties of REITs are held by trustees who ensures that these assets are managed in a way that benefits shareholders. These 3 parties will each charge a fee for their services, and when rental income is generated, the profits are distributed to investors and dividends. This makes REITs an attractive investment because someone with a small capital can invest in real estate by simply purchasing a REITs stock. Once you are an owner of a REITs, you are effectively a small owner of a wide variety of properties. You are entitled to a portion of profits from rental income as well as any capital gains if the stock price goes up. Our first panel is Mariam Fakri, a founder of Mary Kay Beauty and podcast host for Business Unusual. Hi Mariam.
Thank you, Miss Moderator Hafizah. Okay, Assalamualaikum warahmatullahi wabarakatuh everyone.
Our second panel is Sarah Daud, a sales expert and New York Times bestseller authors. Hi Sarah.
Hi.
Our last panel is Jannah Hussain, CEO of J Hall, a brokerage real estate empire with more than 27 billion annual sales.
Hi, I'm Jannah.
I'm sure you already know the background of our panels today without me introduce them because they are well known on social media for their great knowledge sharing. Alright, let's move to our discussion. As we know, investors believe that they should invest in REITs despite of other investment to generate their passive income. But we want to know what is the benefits REITs would give to us rather than other instruments. I think this question is due to be answered by our first panel, Mariam Fakri.
Thank you, Miss Moderator Hafizah. Okay, Assalamualaikum warahmatullahi wabarakatuh everyone. So here I am because I want to share with you all why you should choose REITs as your investment as compared to other investment. Okay, for the real estate investment trusts are buying extensively used by investors and speculators to bid on the real estate sector. REITs do provide a lot of advantage to investor. For instance, investors with small amount of money can also choose to invest in REITs. This is a major advantage since real estate tends to be very expensive and many investors can afford to take an underlying position in real estate. Similarly, REITs also easy to liquidate than traditional real estate investment. REITs also allow investors to diversify their holdings. Instead of investing $100 in the same property, they can invest $100 each in a portfolio of 100 properties. Lastly, investor benefits since their liability are limited to the extent of investment that they make in the REIT. Okay, so this is my sharing about why you should choose REITs as compare other investment.
Wow, no wonder people are waiting for your podcast. You have such a creative sharing and easy to understand. So basically, investors invest in REITs because investors with a small sums of money can also choose to invest in REITs. This is a major advantage since real estate tends to be very expensive and many investors cannot afford to take an underlying position in real estate. I guess our audiences are wondering whether REITs are Sharia compliant or not. I think our second panel can answer this question first. Sarah's book titled Islamic Investment Instruments had won a New York Times bestseller book. Let us listen to her.
Thanks to our moderator Hafiza for giving me chance to share my opinion. Actually, we don't have to worry because Malaysia is a country that concerns with the Islamic law, such as REITs. It's consists of conventional and Islamic REITs. The concept is different based on law, so Muslim trader can choose iREITs to invest.
Now we know that REITs consist of two types, which are conventional and Sharia compliant, as known as iREITs. For Muslim, of course, we need to invest in the Sharia compliant instruments. So you don't have to worry anymore as the choice is ours now. Maybe Sarah can share with us, is there any issues arise in this aspect?
Thanks to Hafiza, our moderator for today. As we know, real estate investment trust, REITs, and also Islamic real estate investment, iREITs, are of the investment vehicle with huge potential and which can contribute to this capital market. So, I would like to share with all of you about issue arise in Sharia aspect. The first issue may arise in this situation is rigid Sharia scholars. The Sharia scholars are rigid in Islamic law interpretation as compared to their counterparts in other Islamic countries. This approach is usually to result in the and slow process of the introducing innovative halal financial product and service. Another issue may arise in the Sharia aspect is purification of income. The iREITs have one more restriction in relationship to the traditional REITs. We have to purify their income by donating to charities. If any incumbent tenant is involved in Islamic activity, there is no prohibition to offer any space to new tenants involved in non-halal activity. Okay, last issue may arise in Sharia aspect is leveraging challenge. Leverage restriction imposed by regulatory bodies and Sharia also impacts REITs opening available to the mass and for organizations. As real estate is both capital and labor intensive industry, adhering Sharia compliance, leveraging level is a challenge in large projects.
I see. The Sharia scholars are rigid in Islamic law interpretation as compared to their counterpart in other Islamic countries. This could cause a slow process of introducing new innovative halal financial product and service. Alright, I think our third panel has been waiting too long. She is excited to share her experience to us, so I would like to ask on behalf of the audience about how far the performance of REITs in Malaysia is compared to overseas REITs.
To Hafizah, our moderator, so I would like to compare REITs in Malaysia and United Kingdom. So firstly, organizational rules. In Malaysia, it must be a registered trust approved by Security Commission, and it can either be listed or unlisted. While in UK, it must be closed-ended one company and listed on London Stock Exchange or any other registered stock exchange. The principal company must be a UK resident company. Organizational rules of Malaysia managed and administered by a management company approved by SC. In UK, management of REIT may be internal or external. In Malaysia, minimum fund size under the REIT guidelines is 100 million. Subsequent issuance of new units shall be of minimum 25 million by unit holders, trustee and SC approvals. In UK, it must have a minimum share capital of GBP 50,000 and must have only one class of ordinary share. The only other class of share which can be issued is non-participation fixed rate preference shares. Secondly, income and asset rules. In Malaysia, income of REIT must be derived from qualifying investment, while in UK, 75% of the income of REIT must be derived from qualifying investment to maintain its tax-exempt status. For unlisted REITs in Malaysia, it must have at least 70% of the total assets must be invested in real estate, single-purpose company or real estate-related assets. At least 50% of the total assets must be invested in real estate or single-purpose companies. At least 20% of the total asset must be invested in liquid asset all the times, and the balance of 10% may be invested in either real estate related asset, non-real estate related asset or asset-backed securities. In UK, property development and other trading are permitted but will be taxed under the normal corporation tax rate. Lastly, distribution rules. In Malaysia, tax is exempted for the income of REIT provided that the condition of distributing 90% of the total income for the year to the unit holders had met. Otherwise, the REIT will tax on its total income. In UK, property income distribution must be at least 90% of income generated from qualifying activities must be distributed by the filing date of the company tax return. PID are subject to 22% withholding tax unless they are distributed to UK corporate, authorized investment funds and certain pension funds.
From Jen's explanation, we see that she compared with UK REITs. So there are three key points, which are organizational rules, income and assets rules, and lastly, distribution rules. I wonder what issue that might arise in REITs. For sure, any investment have their own risks, which make it more profitable. I would like to ask our founder of Mary K Beauty, Mariam, to discuss in depth about this. Maybe it will help our audience to be mature in their investment world.
Alright, thanks again to Miss Hafizah because give me opportunity to share with our audience today. So as we can see today, especially during pandemic COVID-19, many sectors has been affected. Thus, in investment of it also have an issue. The first issue is bank upgrades Malaysia rates to overweight. The worst could be over for real estate investment trust REITs in Malaysia. According to AM Investment Bank Bank, which has upgraded the sector to overweight from neutral. According research report on Thursday, Bank said that REITs under its coverage will broadly be on a recovery path in the next 12 to 18 months as consumer spending and footfall recover. Among the four REITs under its coverage, its top pick are IGB REIT and Sunway REIT, and Ben said that the two REITs are primed to lead the recovery, underpinned by resilient local footfall as they have a well-connected agency community of resident, office and university. The REITs properties also attract mass affluent customers who are more likely to spend during an economic recovery. It noted that the other two REITs under its coverage, which is Pavilion REITs and YTL Hospitality REIT, will face more challenges in recovery due to the greater reliance on tourist traffic. However, it remains positive on their long-term outlook as it believes rebound its footfall will be strong once the travel ban is lifted. The second point is CMCO may impact recovery of REITs. Consumer sentiment and domestic travel patterns are likely to turn more cautious after the implementation of Condition Movement Control Order, and this will have an impact on the recovery of retail and hotel real estate investment trusts. CGS CIMB predict a cautious recovery outlook in the second half of 2020 for the retail, small and hotel players, and had retained its neutral stance on the REIT sector. It also pointed out the downside risk of the extension of the CMCO beyond the current 2-week period, saying there would be severe negative rental revision for retail, small and more subdued occupancy rates for hotels. The upside risk, however, would be a strong recovery post CMCO. For IGB REIT, it's maintained as flagship neighborhood. Most are likely to stage a resilience but gradual recovery post CMCO. The research house said it anticipated a stunted recovery in retail malls footfall internet sales as the CMCO poured cool water on the encouraging recovery statistics since July. The general observation by retail malls REITs indicate that the internet sales recovery rate peaked around end August but was terribly below the level since pre-MCO in the first quarter in 2020. The last issue that I would like to share with you all is whether REITs in Malaysia will be on recovery path for next 12 to 18 months. Will any further outbreak of COVID-19 might still cause bump to the recovery of Malaysia REIT sector? Earning visibility has been improving following the encouraging development of vaccines, with vaccinations already beginning in some countries. Malaysian real REITs Instead Investment Trust has been projected to be on a recovery path for the next 12 to 18 months, particularly IGB REITs and Sunway REIT. We believe the REITs under our recovery will stage a firm recovery post-pandemic, especially once international travel is allowed. This is mainly due to the strong market position and brand name, as well as the strategic location in the heart of the city, which give them the advantage of buying the chosen malls. The wide tenants mix also provided a better shopping experience to consumer, making the malls the primary go-to shopping place within the agency community, especially when the entertainments are allowed to resume operations. Based on our estimates, REITs under our coverage provide distribution yields of more than 4.5% for financial year in 2021 and beyond, compared to the current low interest environment rate. We leave the sector as a recovery play sector, which we believe is poised to benefit from growth in Malaysia's economy post-pandemic.
Thank you for your sharing. It's such a meaningful knowledge for us. I hope that we can take as much as we can in order to be more successful in this business world. Before we end this forum, I would like to answer the questions from our audience. Anyone who has the question can reach us. Thank you for the question, Sharifah. So, Jannah, what is the best Islamic REITs in Malaysia?
A total of 18 REITs in Malaysia, but some of the Islamic REITs are Al-Aqah Healthcare REIT, which is hospital, nursing, college and hotel. Secondly, exist REITs which are official and industrial. Thirdly is Al-Hadarah Bostate REITs, which are oil palm plantations and palm oil mills. Lastly is KLCC REIT, which are retail and office. You can choose any types of properties that has a good current performance.
Thank you, Jannah. It means that we have many choice of Islamic REITs in Bursa Malaysia. Sharifah can choose which one that she interested to invest. Okay, let's move to our second caller. Thank you, Mr. Haziq. So the question is how to overcome the rigid in Islamic law interpretations. So this question is best answered by Sarah. Sarah, you can answer to this question.
Thank you, Mr. Haziq, for the questions. Just now, I already shared a few issues arise in Sharia about iREITs, and now I want to share how to overcome the issue arise in iREITs. First thing first, how to overcome the issue arise is by doing awareness campaign. Roadshow, seminar, exhibition can be quite effective in introducing iREITs concept. As a common man is not aware of sophisticated innovation financial tools available in the market, action taken in this regard can yield more attention and funds from public. Okay. Next way to overcome the Sharia issue is more transparency, which is mean lack of audited publish the account and confidentiality of financial statement creates a void in market. Many established companies refuse to share any financial information with the general public or external stakeholder, thus eroding confidence in trust. A more openness will ensure credibility of initiative. Okay, last way to overcome the issue is train Islamic finance professional. Due to complex nature, it has been experienced that there is short gift of religious scholars who are adept in economic financial affairs. Trained professional with understanding can more be effective in developing and practicing this financial structure.
Thank you, Sarah, for these solutions. I believe a lot of us face the same problems. I hope that this forum will help you to clear the stumbling block inside you. To conclude, what you should be looking at before buying a REIT stock so you can make money from REITs in two ways. The first is from dividend payments, and dividend yield is an important metric to look at. Second, you can also earn from capital gains, which is related to stock price. Of course, there are plenty of other metrics that are important. For example, net asset value, which represents the value of the properties in REITs, and also management expenses ratio, which relates to operating expenses of managing these properties. However, I find that looking at all these metrics individually makes it very difficult to compare REITs across the board. So what I like to do is looking at annualized historical returns of these REITs, because this will ultimately encompass all the effects of all these metrics, either directly or indirectly. iREITs are very important for you to invest because it is secure and convenient for investors who has a small capital. Thank you for our panels for the time to share with us about real estate investment trust, REITs. I hope to see you again. And also thank you for the audience of the Profit Virtual Forum. Remember, how you do anything is how you do everything. Good luck and be bold. Stay safe until we meet again. Assalamualaikum.